Hello and welcome to business-related tax documents and instruction booklets for ENT 630 Entrepreneurial Growth. My name is Joy Poe, and this is my screencast for business-related tax documents. You may begin your tax journey at www.irs.gov. For forms and instruction booklets, you would go to File, Business and Self-Employed, and you will arrive at the Small Business and Self-Employed Tax Center. This is a great place to start if you are a business owner, especially if you are considering anything having to do with your federal income tax. But also there is a variety of useful information for your small business, such as the forms and publication for the IRS, filing and paying your business taxes, EIN numbers, stages of owning a business. There are plenty of online learning workshops and webinars for small business. All in all, this is a fantastic little tax center. Thank you, IRS, which we don't often say, but it is a good place to start. We're going to move on to U.S. corporate income tax returns and U.S. partnership tax returns. The corporate income tax return form is Form 1120. There are 4 types of Form 1120 for corporations. Plain old Form 1120 is for C corporations. 1120S is for S corporations. 1120-C is for cooperatives. And 1120-H is for condominium and housing associations. And then as an adjunct to this, we're going to eventually talk about Form 1065, which is the U.S. return of partnerships. Completing Form 1120 is considered a difficult feat. Most people will need to hire a tax professional to ensure accurate filing of their corporate taxes. It's wise to gather the pertinent information prior to meeting with your tax professional. Your tax professional will need your basic information about your corporation, including name, address, EIN number, date of incorporation, and total assets. They will need your income information, including gross receipts, cost of goods sold, dividends, interest, rents, royalties, capital gains. They will also need your tax-deductible expenses. Although documentation is not required to claim the deduction, you must have complete documentation on expenditures in the case of an audit. They will also need your taxes paid, refundable credits, and payments made, which includes the corporation's taxable income and schedules. The schedules will vary depending on your business, and documentation will be needed in the event of an audit. Corporate taxes are due to be filed by the 15th day of the 3rd month following the date its tax year ended. You can find IRS tax dates for businesses and self-employed at the irs.gov. If you are filing as a limited liability corporation, some things are a little bit different. If you are curious, you can go to 6 Things You Need to Know About Your Tax Responsibilities as an LLC. This is an article by the U.S. Small Business Administration and is a great starting point for the intricacies of small business, including the LLC. As an LLC, the business will not necessarily file Form 1120, as we talked about. LLCs have a few options for filing, which brings to light the importance of choosing the correct business structure for your company. An LLC with multiple members may decide if they want to be treated as a corporation, a partnership, or as part of the owner's tax returns by filling out Form 8832. Form 8832 allows the LLC to elect their business classification for tax purposes. Therefore, if a single-member LLC chooses to file their business taxes on their own return, this is called a disregarded entity. They are disregarding the entity of corporation and choosing to be a single person. The IRS will consider a single owner LLC as a disregarded entity unless the owner fills out Form 8832 and chooses to be taxed as a corporation. If an LLC has at least 2 members, the IRS will classify the business as a partnership unless the owners fill out the Form 8832 and choose to be taxed as a corporation, partnership, or disregarded entity. For further information on the intricacies of the LLC, refer to IRS Publication 3402. Moving on to partnerships. Partnerships file Form 1065, the U.S. Return of Partnership Income. Form 1065 is an information return used to report the income, gains, losses, deductions, credits, and other information from the operation of a partnership. A partnership doesn't pay tax on its income but passes through any profits or losses to its partners. Partners must include partnership items on their tax or information returns. An unincorporated organization with 2 or more members is generally classified as a partnership for federal tax purposes if its members carry on a trade, business, financial operation, or venture and divide its profits. However, a joint undertaking merely to share expenses is not a partnership. For example, co-ownership of property maintained and rented or leased is not a partnership unless the co-owners provide services to the tenants. Generally, if you and your spouse jointly own and operate an unincorporated business and share in the profits and losses, you are partners in a partnership and you must file Form 1065. Form 1065 is due to be filed by the 15th day of the 3rd month following the date its tax year ended. Form 1065 is a complicated procedure and may require the help of a tax professional. Be sure to gather the required materials and information before your meeting. These items will be the same as were cited for Form 1120. Here we have some resources that I've found pretty useful in gleaning information and understanding exactly what some of these publications do. Again, the IRS website is filled with useful FAQs, and I love that small business center that they have. The website, thebalance.com, has an overview of corporate taxes and some valuable links to help answer some questions. We also have links to the IRS publications for corporations, for LLCs, for partnerships. And then there's also a Investopedia article that breaks down the aspects of being a partnership. And then finally, we have the U.S. Small Business Association, which has a learning center and a bunch of information to help small business owners. Moving on, we'll talk about North Carolina sales and use tax and the state income tax return. You can begin your North Carolina tax journey at www.ncdor.gov. If you were to click on businesses, you can then move to sales and use, and then move over to the overview of sales and use taxes. Here you'll find a variety of useful information for your small business, such as all the taxable sales and use items in the state of North Carolina. The sales and use tax covers personal property that may be seen, weighed, measured, felt, or touched, or is in any manner perceptible to the senses, and then sold at retail. In those instances where the appropriate sales tax has not been paid on taxable, tangible, personal property, a use tax applies to the tangible, personal property purchased or received from within or without the state for storage, use, or consumption in the state. Some specifics about the sales and use tax. If the taxpayer's monthly tax liability is $100 or less, the taxpayer is required to file a sales and use tax quarterly. The returns with remittance of tax are due on or before the last day of January, April, July, and October for the preceding 3-month period. If taxpayer's monthly tax liability is consistently less than $20,000 per month and at least $100 per month, the taxpayer must file monthly on or before the 20th day of each month for all taxes due for the preceding calendar month. The taxes due must be remitted when the monthly return is sent in. A taxpayer who is consistently liable for at least $20,000 a month in state and local sales and use taxes must make a monthly prepayment of the next month's liability when filing the monthly return due on or before the 20th day of each month. You must register for a sales and use tax account through the North Carolina Department of Revenue by completing Form NC-BR or visiting the online business registration portal. The sales and use tax form to file is Form E-500. It can be filed online, by mail, or over the phone. refer to the sales and use tax rates and other information webpage for information about sales and use tax rates. At present, the sales and use tax for Buncombe County is 2.25%. Moving on, we'll talk about the North Carolina income tax return. All domestic corporations and all foreign corporations which are doing business in North Carolina, and every inactive corporation chartered or domesticated here must file an annual franchise and income tax return. Limited liability companies are subject to state taxation according to their classification for federal income tax purposes. Therefore, if a LLC is classified as a partnership for federal income tax purposes, then the LLC and its members are subject to tax to the same extent as a partnership, and its partners are therefore required to file the North Carolina partnership return. A North Carolina partnership return, which is Form D-403, must be filed by every partnership doing business in North Carolina if a federal partnership return was required to be filed. If you're a sole proprietor, you will file an individual state income tax return appropriate to your situation. If you have already hired a tax professional to do your federal taxes, it's wise to have your tax professional do your North Carolina income tax return as well. I did find the North Carolina Department of Revenue website to be a little bit more confusing, less direct, and harder to find information on than the IRS website. And finally, the golden rule of taxes: make sure you pay your taxes. Otherwise, you can get in a lot of trouble. Just ask Richard Nixon. Here are my references. Apologies for the Wikipedia ones. And thank you for listening. I hope you have learned enough information about Form 1120, Form 1065, the sales and use tax, and the North Carolina income tax. Thank you.